Good afternoon, students. Welcome back to this discussion on audit. So today we plan to continue with our discussion on some more areas which are around the audit and when it comes to the audit of the financial statements. Okay, but let's do a quick recap in terms of the topics that we covered in the previous session. So that is about management representation letter. We talked about it. We have had we've had discussions around it in terms of what is required to be done, what is the importance of this representation letter, and whether we can say that this representation letter is good enough or not when it comes to the audit of financial statements. Okay, therein, because different thoughts are also attached to this. Now, as around the rep letter, we can say it's an important document, and in relation to the audit that we cover, this is required to be obtained. In relation to the audit, it is required to be looked at as to what all responsibilities were there on the part of the management, whether they have fulfilled their responsibilities or not. Okay, and if at all you look at the management's responsibilities in relation to the financial statements, in relation to the financial reporting, in relation to the internal controls, all of these aspects, you are just trying to obtain all of these things in writing. Yeah, so that is something that we just tried to cover in relation to the representation letter. Further, we also discussed as to what should be the flow, means where does it come from, who will sign this, and if at all this is required to be provided, then what is going to be the time frame which will be covered by this letter. When is this representation letter signed by the entity? Okay, so in all of these cases, we understood that this representation letter covers this entire audit in a way. And when you say covers this entire audit, so of course, it will be in relation to the financial year for which the financial statements are prepared. But at the same time, in relation to audit, in relation to financial statements, we need to consider some of the subsequent events which will arise after the balance sheet date and which may have a bearing on the financial statements, and which is something which the management is also required to look at. Okay, so therefore all of those points should also be covered by the representation letter. And that is where we discuss that this representation letter, you will see that the company signs this on the date when the audit report is signed off, on the date when the financial statements are signed off, and generally they coincide. If you look at the requirements of the auditing standard, this also says that this has to be near around the date of the signing of the financial statements, which is effectively the same thing as regards the closure of audit means in terms of sign off. Another point which is very important in respect of this representation letter that we talked about was to obtain the misstatements. If let's suppose there are some misstatements which are not material, or if those are material, then the financial statements have been prepared by carrying those misstatements over there. Yes or no? So if let's suppose management is carrying certain misstatements in the financial statements, if those are material, then those need to be specified in the representation letter. Why? Because the financial statements have been prepared on that basis. Correct? Which looks logical, because the management has done the material misstatements, and which will come over there in the form of the basis of preparation which they will write down. Plus, if the financial statements contain some misstatements which are immaterial, immaterial means over which auditor auditor doesn't have any sort of qualification, any sort of adverse opinion, even those misstatements are required to be covered in the representation letter. Yeah. Why? Because when it comes to the representation letter, it talks about the basis of preparation of the financial statements. And if the financial statements have been prepared wherein anything is included there, whether that's in the form of misstatement, whether that is in the form of any accounting policy, whether that is in the form of some of the estimates or the judgments which the management has considered, all of them will form part of it. Okay, so you should not be thinking that all of these misstatements, whether those are adjusted, unadjusted, whether those are material or not material, they are the parts related to the audit, and that's why this should not form part of representation letter. Why? Because representation letter is a document of the management. It has got nothing to do with the auditor. Means it's not the document of the auditor. Yeah, but it's something which is meant for the audit. Okay, so that's why all of these points are required to be considered over there. Further, when it comes to the management representation letter, there is another very important point in relation to this, which is required to be, you know, sort of understood. And we can look at, I think, an example to discuss this point in further detail. And that is about checking as to whether you will consider this management representation letter as the only document while you perform the audit procedures. We have had some discussions around this aspect as well, but let's do a quick recap. Now, let's suppose during the course of audit, certain procedures are planned by the auditor. Yeah, let's suppose auditor has planned certain procedures. Say in relation to borrowings. Yeah, so the borrowing cost means the interest cost. Auditor is looking to check that. So he's asking for calculations, he's asking for various other documents in relation to this interest. Okay, but for some reason management doesn't have the calculations, or you can say all of these workings, etc. Management doesn't have that. Okay, and what they have done is they have just looked at the interest which is reflecting in the bank statements. That's the only basis which the management has followed. So how did they record it? On the basis of interest which is reflected in the bank statement. That's it. But the management is willing to provide this in writing to the auditor as regards this interest cost. Okay, management is willing to do that. So management is saying that we are okay to write down that this interest is as per the provisions of the accounting standards. There's no gap therein. Financial statements have been prepared by considering the interest amount, which you can see in the financial statements. Okay, and that is absolutely okay. Means as far as its accounting is concerned, there's no gap. Now tell me, in this scenario, if you happen to be the auditor of this entity, will you be okay with this? Tell me, will you be okay with this? Any thoughts that you may have? Will you be okay with this? Over to you. If let's suppose you come across any such situation, you happen to be the auditor of this company. So what will you do? How will you handle this? Prem says no. We will not be okay with this because this is not sufficient and appropriate audit evidence. Anyone else? Quickly. In this case, what do you do? See, in this case, as around this interest, please remember, management is providing the rep letter. Management is happy to write down a specific representation in relation to this matter. So tell me, what will you do? So in this case, what will happen is, just obtaining this representation letter, okay, or whether you call it as specific representation, that will not suffice. Okay, so this will not suffice. Of course, this will act as an audit evidence. There's no doubt about it. This will definitely act as. But can we say that will be sufficient? The answer is no. That is not going to be sufficient. Okay, and that is where it is considered that written representation letter is not a conclusive evidence. Okay, it is not a conclusive evidence. Yeah. Along with that, various other audit procedures which are required to be performed will have to be performed. Any other document which is required to be obtained has to be obtained. Yeah. So that's how this needs to be taken care of. If let's suppose there's an area over which you just go and obtain the representation and you do nothing beyond that, so it will be considered as if no audit has been performed on that. Yeah, so that verification will be considered to be incomplete in such a scenario. Okay. Now, in relation to this representation letter, see, one of the management representation letter format, if you remember, we discussed. Yeah, you remember we looked at one format which was available in the study material also. Everyone, quickly. Remember, there was a format we discussed that's available in the study material also. Everyone, remember that format? Yeah, so I'm just talking about this rep letter. Huh? Now, in relation to that format, what did you see? A lot of points were covered. Yes or no? So now, when it comes to the management representation letter, it would mean obtaining that letter. Yeah, and this letter would contain all the points. This would contain all the points. All the points means all the points in relation to the financial statements. Okay. Sometimes what may happen is that a particular matter is very critical, very important as far as audit procedures are concerned. Some of the areas could be very, very important. Maybe a significant judgment on the part of management is involved. Some significant estimates are involved in relation to the accounting which the management has done. In such cases, over and above this management representation letter, auditor may request, or you can say the management may also decide that in relation to that particular matter, management will give this in writing to the auditor that this is how accounting of that particular event, that particular item has been done. Okay. That is what you call as specific representation. Now, how is it different? See, as such, there is no difference between the letter and the specific representation. You can just simply say that this is an add-on. Add-on in a way that if let's suppose there is an important matter over which auditor wants some more comfort, so that's why he's saying that, okay, you will give me this rep letter. But other than that, in relation to a particular area, let's suppose some areas over which significant judgments are involved. So therein, auditor may request the management to provide another document, another letter covering only that particular matter. So we are not saying that it's going to be a duplicate document. Of course, it's a kind of duplicate, but in this specific representation, all the matters will not be repeated. Only that specific matter will be given and in more detail. You can say it will be more descriptive about that particular specific matter. And that's why this has been termed as specific representation. Now, what is the objective of this? Again, to give some comfort to the auditor. Okay. Here again, can we say that if the management is providing a specific representation over and above this management representation letter, so should that be considered as conclusive? The answer is again no. Answer is again no. Why? Because it's only a piece of paper over which the management has just written down as to what is it that they have done. Okay, whether it's a part of the regular representation letter, or you can say a specific document which is provided by the management. That's one and the same thing. Yeah. Just by obtaining the document, comfort of the auditor will not be achieved. He will not be getting into a situation to say that, yes, of course, everything around the audit has been obtained. Everything as around the audit evidence has been obtained. So that's why you should not get confused that just because a specific representation has come in, so that will suffice, or that will be something which will be now sufficient. Okay, clear on this, everyone? Any questions, any doubts if you have? Please let me know, then we'll move on to one question. Okay, Prem is clear. All right, so now let's look at this example, and everybody needs to attend this, huh? Okay. CAR Gurumurthy is about to complete the audit of a company. Okay, so it happens to be an auditor currently in the process of audit of a company. Before completion, he asked the management to provide him written representation confirming that management has fulfilled its responsibilities regarding preparation of financial statements. Okay, so it's like auditor has requested for a rep letter. Further, he also wants the management to confirm in writing about providing of all necessary information and completeness of transactions to him. Okay, so auditor is asking that in the letter you should write that you have provided everything which is required. All the transactions which have taken place during the year, you have recorded that. Okay, in a way, he's just talking about the completeness. Okay, now management feels that auditor is seeking irrelevant documents. So management is saying that at one place, auditor has done his job. Okay, he is about to complete the audit. Means he's just through with everything. So everything he has requested for, we have provided. Any information he asked for, we have provided. Financial statements which we have prepared, he has now checked it. So he should be knowing whether everything is complete or not. He should be knowing whether the transactions which are required to be captured are covered or not. Yes or no? That's supposed to be his role. Yeah. In this case, that is why management believes that this written confirmation which the auditor is asking is something which is irrelevant. Okay. Why to provide that if everything is already completed? In this case, what is your view as around the auditor's requirement, as around the thought process of the management? Over to you. What is your view? Further, the question says, what possible implications it may lead to? Yeah, so you can say in a way management doesn't want to provide this. So what are the implications in the given scenario? Yes, quickly, over to you. In this case, what is your view as regards the auditor, as regards the management, and as regards the implications, considering the situations, considering the situation they are in? Yes, over to you, everyone. I think we have already talked about representation letter. Yeah, so that's why I'm expecting everyone to answer this. Quickly, everyone, what should be done? What about auditor? What about management? Do you think the requirement is justified? Do you think the requirement is not justified? What is the rationale? What should be the course of action now in the given situation? Yes, quickly, huh? What should you do as an auditor if, let's suppose, you come across this situation? What will you do? Yes, waiting for a response. What will you do as an auditor? Quickly, in the given situation, what is okay? Tell me one thing. Forget about this explanation. Do you agree with the requirement of the auditor? Yes or no? In the given situation, do you agree with the requirement of the auditor? Prem says yes. Priyanshi says that auditor is seeking relevant documents. Almas says yes, we agree that the requirement of the auditor is justified. I think Prem has also explained this. He's saying written representation supports the audit evidence. View of the management is not proper in the given scenario. Auditor can give disclaimer of opinion if the management doesn't provide this letter to the auditor. Okay. So now, in the given situation, what will you do? There's no doubt that the requirement of the auditor is justified. And the view of the management, therefore, is not justified. Yeah, so this point is absolutely clear. Yeah, so there's no doubt about it. Audit evidence obtained during the audit that the management has fulfilled its responsibilities regarding preparation of the financial statements and about information provided and completeness of transactions is not sufficient without obtaining confirmation from the management. Obviously, because at one place we understand that management has prepared everything the way it was required to be done, no doubt. But at the same time, we also need to understand that auditor can't check each and everything. He's not supposed to check each and everything, but he has to ensure that everything has been covered therein. So that's why he can always ask the management to give this in writing. Yeah, yeah. Auditor is not able to judge solely on the basis of other audit evidence whether the management has prepared and presented the financial statements and provided the information to the auditor on the basis of agreed acknowledgement and understanding of its responsibilities. Okay. Now, in case the management refuses to provide such confirmation, now the question arises that okay, this part is understood that the requirement of auditor is justified. View of the management is not correct. But what if this is not provided? Yeah. So how do you handle this situation? If let's suppose you happen to be the auditor, so what do you do? How do you do? How do you take care of this situation? Yes or no? See, in the given situation, what is the course of action on the part of the auditor? Only one. Auditor will have to assess that by not obtaining this document, yeah, what is the audit evidence that he is missing out on? And therefore, what is going to be the impact of non-receipt of such information on his audit process? See, because this document is something which covers this entire set of financial statements. Okay, so its impact is going to be huge. There's no doubt about it. And that's why it's considered to be a very important document from the perspective of the auditor. And something which is going to be a significant a document of significant importance to the auditor. Non-receipt of such document, what will that lead to? Obviously, that will lead to the reporting implications. Yeah, so the auditor will have to decide as to whether he can provide a true and fair view or not. But in the given situation, forget about the true and fair view. First of all, audit has to be completed. Yes or no? First of all, what will you do? Audit will have to be completed. And for completion of audit, required information, required document should be provided to the auditor. Now, this also happens to be one of the required information, one of the required document. And if that information is not received, so can we say that the audit gets completed without this information? And if any other alternative procedure, any other alternative course of action is not possible, can we say that? What do you think? Yes or no? In the given situation, can we say that the audit is completed without this? Tell me quickly. What do you think? Do you think audit is completed? Do you think audit can be considered to be complete without this? Quickly. Prem says no. Priyanshi says no. So, in a situation when the audit is not completed due to lack of information, one of the reporting implications could be to give a disclaimer of opinion. Now, what is this disclaimer of opinion? What is that reporting implication? I think we talked about it in the previous session also, that when you will cover audit report, you'll get to understand about all of these things. So maybe you can just make a mark on this. Yeah, so your next topic anyways, means in the next session anyways, is about the audit report, wherein you'll start getting an understanding around all of these areas. Fine. So in the given situation, we can say that this may lead to disclaimer of opinion by the auditor. Yeah. And in a very, very simple terms, you can say that disclaimer reflects a situation that audit has not been completed. Or you can say auditor has not been able to complete the audit. Okay. Yeah. Everyone clear on this? Yeah. All right. Any questions, any doubts if you have? Please let me know. Any questions, any doubts so far? I think as around the rep letter, we have covered all the points. Yeah. Any questions, any doubts? No? All right, so great. So let's move on to our next topic. See, the next topic, in fact, the couple of auditing standards that we plan to do now, they are in relation to communication between the auditor and those charged with governance. As regards this term, those charged with governance, we have had discussions. Yeah. But let's try to once again understand as to what is this TCWG. Who are those charged with governance? Okay, to get some more clarity. Person or the organization who have the responsibility for overseeing the strategic direction of the entity, obligations related to accountability of the entity, including overseeing the financial reporting process. Now, who are those persons in a company? Board of directors, audit committee. Because if you look at the roles and responsibilities, so this role and responsibility is assigned to the board of directors, or you can say the audit committee. Yeah. Now, governance structure varies depending on the kind of entity that we have. And again, this may get impacted due to the size, okay, or due to the ownership characteristics. For example, in some entities, a supervisory board exists that is separate from executive board. In other entities, both supervisory and executive functions are performed by a single board. In some entities, those charged with governance hold positions that are an integral part of entity's legal structure. What are those? Directors of the company. In some cases, some or all of those charged with governance are involved in managing the entity. So again, depending on the type of entity that you'll have, depending on the kind of structure that it will have, okay, depending on the roles and responsibilities which are assigned to those individuals, this sort of varies. But if you look at a company, so I'm just talking about a company, it's the board of directors or the audit committee. But if you look at a non-company, for example, partnership firm, so who will you call as those charged with governance? Partners. Proprietorship firm, proprietors. Okay. Trust, it will be trustees. Okay. In some smaller entities, owner who may be acting as the manager, who may be overseeing the operations, everything. Okay. That's driven singly by that owner. So you can say that owner happens to be the person who has that responsibility, who has that uh, requirement. So therefore, that owner will become those charged with governance. Priyanshi is asking, sir, in HUF Karta? Yes, in HUF Karta will be those charged with governance. Yeah, because these are all structures which are driven by an individual largely. Yeah. So I think this is briefly about the understanding of those charged with governance. Okay, I'm just hoping that everyone is now clear that who will become those charged with governance. Yeah, clear? Okay, now let's talk about audit. Let's talk about audit. Okay, in an audit, two teams are involved. Again, this is something that we have discussed. Let's try to understand what are those two teams. One is the audit team, and second is the client, or you can say entities personnel. In a way, you can also say that at one place you have the auditor, and at the other place you have the company or the entity or the client. Yes or no? So this is how you can say things may be structured. Correct? As far as audit is concerned, can we say that it's only the responsibility of the auditor? The answer is no. See, it's something which is teamwork. And by teamwork, we don't mean to say that it's about the teamwork from the auditor side. Teamwork means both the parties, auditor as well as the company, they need to get involved in this process. Only then the audit will be completed and in an effective manner. Yes or no? Yeah. Only then the audit will be completed in an effective manner. Correct? So therefore, we can say that communication between these two parties is extremely important. These parties need to work together for achieving the desired objectives which are attached to the audit. Yes or no? Everyone? Yes or no? Yeah? Now, considering this thought process, now a question arises that during the course of audit, what should be the communication mechanism between the auditor and those charged with governance? See, now if you look at it from the perspective of auditor, let's suppose auditor has got a team of 10 persons. So there's an audit partner, EQCR. So there's an engagement director, engagement manager, and the team members. Okay. Similarly, from the client side, there will be the CFO, accounts team is there, board of directors is there. Yeah. So now some communication channel, some communication mechanism needs to be set up between these two parties. And what is the objective? Objective is getting to an audit which is completed in an effective manner. Yeah, so that's the objective that we are looking at. Now, considering that objective, it is very, very important to ensure that there is a communication between two parties, auditor and the client. And from the client side, those charged with governance should also be a part of that process. So it can't happen that CFO will remain involved in the audit and board of directors are not aware of that. Okay, or they have got nothing to do with that. Why? Because it's something which is an activity for the company. It's an important activity for the company, and that's why those charged with governance, they also need to stay involved. Yeah. So that's why some communication mechanism needs to be set up between the auditor and those charged with governance. Correct? Yeah. Now the question arises that why is that important? How is that going to benefit the auditor? How is that going to benefit the company? Means, how is this audit process going to get benefited due to this communication channel that we establish between the auditor and, say, board of directors? Yeah, so let's try to understand. Auditor and those charged with governance, if they communicate in an effective manner, yeah, so this will assist the auditor and the board of directors, for example. So I'll just use this term board of directors and say those charged with governance interchangeably. So don't get confused. Huh? Auditor and those charged with governance in understanding the matters related to audit and in developing a constructive working relationship. Yeah, this is very, very important. Why? Because till the time both parties do not have a clarity as to what is required to be done, why is that required to be done, how is that required to be done, can they work in a collaborative manner? Can they work in a manner which is constructive to this entire process? The answer is no. So that's why this communication channel becomes important. Auditor in obtaining from those charged with governance information relevant to the audit requires what? To communicate with them. For example, board of directors may assist the auditor in understanding the entity, its environment, in identifying appropriate sources of audit evidence, in providing information about specific transactions or events. Okay, so all of these things are important. And you can say any information or any critical information will always be available with the board of directors. Yes or no? Yeah. So if the auditor will communicate, interact with them, auditor will get complete clarity, complete information which is relevant in relation to his audit. Correct? Further, this will assist those charged with governance in fulfilling their responsibility to oversee the financial reporting process. See, if you look at those charged with governance, they also have a responsibility. Yes or no? They have a responsibility. And what is their responsibility? To oversee financial reporting process. So that is just that is what we discussed. Now, fulfill this responsibility. What do they need to do? They need to get into this process. And for getting into this process, they need to get involved in the audit also. That is how they will get involved in this. Otherwise, what will happen? They will not be involved in this. And if they do this, so what will happen? Risks of material misstatements in the financial statements will get reduced, will get minimized. Okay. So therefore, for reducing such risks of material misstatements, what is required to be done by the auditor? What is required to be done by the board of directors or the audit committee? To establish a proper communication channel. Yeah, clear? Everyone clear? Any questions, any doubts so far? Tell me quickly. Any questions, any doubts? No? All right. So now there is this auditing standard 260. So it talks about communication with those charged with governance. Yeah. So in relation to this communication between two parties, auditor and those charged with governance, there is a separate auditing standard. Can you understand the importance of this area? A separate auditing standard is there on this particular area. And in today's times, a lot of focus is given to this aspect because it's observed that during the course of audit team will interact with the client personnel, with the management, with the CFO, with the accounts personnel. But when it comes to those charged with governance, auditor and TCWG has a very, very limited interaction. And if the interaction is very, very limited, so will that really help the audit? Will that really help the audit process? Answer is no. Answer is no. That is not going to help the audit process. Audit process is going to get impacted. Yeah. So therefore, it becomes very, very important on the part of the auditor as well as those charged with governance to ensure that this communication is there amongst themselves. Further, that communication is also in line with what this auditing standard requires. So what are the objectives of this auditing standard? One, to communicate clearly with those charged with governance. About what? About the responsibilities of the auditor in relation to audit of financial statements. About the scope, means the planned scope of the auditor. So every auditor will have a scope of work. Yeah. So that communication has to be there. Timing of the audit. Yeah. To provide to those charged with governance with timely observations arising from the audit that are significant and relevant to their responsibility to oversee financial reporting process. Now, what could be these observations? These observations could be in relation to the significant matters. These observations could be in relation to the material misstatements, or this could be in relation to immaterial misstatements, but which are unadjusted, or maybe material misstatements, but those are adjusted. Because to a certain extent, because of those misstatements, financial reporting process has got impacted or not. Yeah, that has got impacted. So that's why it's important for board of directors, audit committee to understand as to what is going wrong. How is that going wrong? Where is that going wrong? Yeah, so this is something which the auditor will be able to provide. Okay, and of course, the idea is to make this two-way communication and to promote this two-way communication between the auditor and those charged with governance. Yeah. Now the question arises that when this communication will take place. Of course, communication means auditor will go meet with the audit committee. Auditor will go and meet the board of directors. So when they go and meet, okay, so what is it that the auditor communicates? Or what is it that he is required to communicate? Okay. So there are certain matters which are required to be communicated by the auditor with those charged with governance. So let's try to understand those matters one by one. First, auditor's responsibilities in relation to audit of financial statements. Now you may be thinking, sir, is that not known to the board of directors? Is that not known to those charged with governance as to what is the responsibility of auditor? Of course, they know about it, but Let's go back to our discussion on representation letter. Okay. Despite doing everything, auditor is asking something in writing from the management or not. Yeah. Why? Because you should not assume anything. So same goes with the auditor. So auditor is required to communicate. Of course, it's there in the engagement letter. Of course, it's something which the auditor will be doing during the course of audit process, but still it's specifically required to be communicated. Yeah, communicated about what? That the auditor is responsible for forming and expressing an opinion on the financial statements that have been prepared by the management with the oversight of those charged with governance. Further, audit of financial statements does not relieve the management or those charged with governance of their responsibilities. Now, this is something which is important for them to know. That doesn't mean that the management is relieved or audit committee is relieved, board of directors are relieved. No, as far as their responsibilities are concerned, that continues to remain with them. Okay, they are not free from that. Yeah. Further, what is the scope of the audit? Now, depending on the type of engagement is involved, scope may vary. Statutory audit is all about audit of financial statements. Correct? But in that case, some standardized procedures which are required to be performed, how those procedures are planned, what are the significant risk areas, what is going to be the timing of the audit. You can say to a certain extent that audit plan in a broad manner, in a summarized manner, is required to be communicated. Okay, is required to be communicated by the auditor to those charged with governance so that they can understand about it. They can get some clarity around it. Yeah. Next, significant findings from the audit. Now, this is again something which is very, you can say this is something which is very common and quite understood, because anybody will assume that during the course of audit observations which the auditor will have, so auditor will always want to communicate that. Yeah. And in this case, we can also draw reference to misstatements. Now, in relation to the misstatements, some of the misstatements may have been rectified. So, are those misstatements significant enough for communication to those charged with governance? So, that is one aspect which the auditor needs to decide. Okay, so during the course of audit, auditor will not get on to each and every item, each and every observation for a discussion with board of directors. Why? Because it's not about the accounting personnel, or it's not about the finance head whom you go and meet and you discuss each and every area. Yeah, because during the course of audit, there could be various areas. There could be 15 items, there could be 20 items, there could be 40 areas, or there could be small errors, lot of adjustments which may have taken place. So do you really go and communicate each and every such thing to the board of directors? The answer is no. Why? Because for all of these things, management is there in place. To those charged with governance, what do you go and tell them? You go and tell them about the significant matters. Yeah, so that's why auditor will have to filter out those matters which he believes are significant, which he believes are important for the knowledge of those charged with governance, wherein each and every area, each and every observation should not be covered, should not be communicated. That will become inappropriate. Yeah, okay. So now, in this case, auditor shall communicate with those charged with governance his views about significant qualitative aspects of entities' accounting practices, including accounting policies, accounting estimates. Now, this is very, very important. Accounting estimates, very, very important. Disclosures given in the financial statements, again, very, very important. When applicable, the auditor shall explain to those charged with governance why the auditor considers a significant accounting practice that is acceptable under the applicable financial reporting framework not to be the most appropriate to the particular circumstances of the entity. Okay, why is that so? If let's suppose during the course of audit, auditor is facing some significant difficulties, so auditor will go and tell them. Okay, so it's not about making complaints to them. Yeah, so please try to understand. It's not about making complaints. It's all about bringing to the knowledge of those charged with governance that these are the areas, these are the items which are troubling the auditor, maybe the management also, and which are impacting this overall financial reporting process. There's one area in the audit report which is quite linked to these significant difficulties. Can somebody help me with that point? If you have gone through the audit report, there's one area which you find in the audit report which you can link to this point. Quickly, anyone who can just think about it? Over to you quickly. Quickly. Anyone? No? See, okay, so I can see some responses. Great. Prem says lack of cooperation. Yes. But I was just referring to one section which you see in the audit report. I'm sure you have not looked at that and you anyways have not covered that. So that's why you are not aware of that. And which is again something that we are going to cover in greater detail when you pick up this audit report. That is what you call as key audit matters. Okay, so there's a section in the audit report wherein the auditor is required to specify key audit matters in the audit report. Yeah. And for those matters to be specified in the audit report, one of the bases happens to be this significant difficulties resulting in significant efforts on the part of the auditor. Okay, so this happens to be, you can say, some sort of criteria to be looked at, to be taken care of while reporting some of those items in the audit report. Okay. Further, unless all of those charged with governance are involved in managing the entity, significant matters arising during the audit that were discussed or subject to correspondence with the management. Circumstances that affect the form and content of audit reports. Now, what are the circumstances? which can have an impact on the form or the content. Of course, the qualifications, any sort of modification, or if any matter is required to be highlighted in the form of EOM, if there are some other matters paragraph. So all of these things become important on the part of auditor to be communicated to those charged with governance. Or if there is any area which auditor believes is important for the knowledge of the board of directors, audit committee. So of course, those things will also be communicated. Yeah. So some of these points that we just discussed, which are in relation to the significant matters, you will see this communication between the auditor and the TCWG in all the entities. But when it comes to listed companies, okay, so we are talking about listed companies. So when it comes to the listed companies, some more points are required to be covered by the auditor in terms of his communication. Means this is something which the auditor will have to communicate to the TCWG. Now, what are these points? A statement that the engagement team and others in the firm as appropriate, the firm and when applicable network firms have complied with ethical requirements and independence. So basically it talks about independence. Now please remember, auditor has to be independent. If you look at the audit report, it is called as independent auditor's report. So that's why when the auditor go meet the TCWG, go communicate with them. So auditor will say, of course, about himself, about his team members, as to whether they are independent or not, and they should be independent. Only then the audit can be performed by such auditor. Okay, yeah. Now, as regards the communication process, let's try to understand as to how this communication process shall work. Auditor shall communicate with the TCWG as around the form, timing, and expected general contents. This communication will be in writing. In writing means, it doesn't mean auditor will go and write a letter and that letter will be given to the, no. So auditor will write down all of these points. They will also be formally communicated to TCWG. But in a meeting, auditor will also go meet them and explain all of those points. Okay, so generally a presentation is prepared in the form of PPT, which is then discussed with the TCWG, wherein all of these pointers are written down and which is then communicated by the auditor to TCWG. Okay, so this communication, of course, happens to be a verbal one, oral one, but this has to be in writing, which is also given to them. Okay. Now, the next question arises. Let's suppose if this meeting between TCWG and auditor takes place for 2 hours. So does it mean that each and everything that the auditor will speak will have to be in writing? The answer is no. See, that is what you call as minutes of the meeting. But before the meeting, some sort of preparation in the form of writing or in the form of document that the auditor will carry will have some pointers. And those pointers should have coverage of all of those areas that we discussed. But that doesn't mean that each and everything which is written over there will only be spoken. Of course, detailed discussions as around a particular matter, as around any particular activity may take place. Yeah, which will then form part of minutes of the meeting. Okay. Adequacy of the communication process. Now, auditor shall evaluate whether the two-way communication between the auditor and those charged with governance has been adequate for the purpose of audit. Yeah. Now, this is something which the auditor needs to assess. This is something which is judgmental. Yeah. Auditor needs to decide. Auditor needs to assess its adequacy. Okay. Documentation, of course. Now, this is very, very important. See, as around all of these communications, all of these pointers, a documentation is required. We have been talking about it that in relation to the audit, anything which is done, and if that is not documented, it's considered as if it's not done. Yeah. Okay. So that's why documentation is very, very important. Without the documentation, audit is not considered to be completed. And if you are talking about communication with those charged with governance, if you are talking about communication of any matter to that, then we have already discussed it has to be in writing. And if that has to be in writing, so somewhere you also need to discuss about the minutes. Maybe you can just prepare a plan as an auditor, or maybe you can just write down the minutes of this meeting with those charged with governance, because that can become the documentation of this communication which has taken place, which is required to be done by the auditor. Okay. Yeah. Clear on this? Yeah. All right. So now, in relation to the communication with those charged with governance, we discussed certain areas, we discussed certain matters as to what all communication is required, how that communication is required, okay, why that communication is important. In this communication, another matter which becomes important, or another matter which is required to be communicated, happens to be significant deficiencies in the internal control, or you can say something around the internal control, over which we are going to have a detailed discussion. But before that, I think we can just first of all stick to this communication between the auditor and those charged with governance. Okay, maybe we can just discuss certain aspects around it, discuss some of the questions around it. Okay, yeah, and then we'll move on to this further part in relation to this communication. So, any questions, any doubts that you may have so far? Over to you. Any questions, any doubts that you may have, please let me know. Tell me quickly, any questions, any doubts? No? All right. So let's take a break now. Yeah. So after the break, let's continue on this. Okay. All right, so let's continue. Okay, so quickly, let's look at some of the questions around this communication with those charged with governance. So we discussed about the auditor's responsibility. Yeah. All right. So these are the responsibilities. Now, whether the following persons can be considered as appropriate person to be chosen in relation to those charged with governance. So now what are going to be those persons? If it's a single owner, then he is involved in the managing and governance role. Company's director involved in day-to-day operations, direct descendant of the founder in a large family-owned entity, members of those charged with governance when entire those charged with governance is engaged in managing the entity. Okay, so now of course this is something which you need to evaluate. Again, that will be dependent on the structure, responsibilities, which is assigned to some of them. Yeah, so accordingly you'll have to just look at it. The matters to be communicated, I think we have already looked at some of the matters, but quickly to list down what are going to be those matters which are required to be communicated, which are required to be discussed in that meeting with those charged with governance. What are going to be those matters? One is, of course, the planned scope, timing of audit, significant risks, okay, financial reporting framework, significant representations which would have been obtained, okay, significant findings which will be all about various matters, whether that is about CAM, material weaknesses or significant deficiencies in the internal financial control. That is something that we are going to discuss in more detail now. If at all there are any non-compliance of laws and regulations, qualifications, okay, if there are any emphasis of matter, if there are any matters over which management has got some disagreements in terms of the financial reporting requirements. Then of course about the independence, okay, if there are any independence issues, what are safeguards which have been taken. Yeah, so these are the matters to be communicated. Now what could be the examples for some of these? For the accounting policies, means if there are some acceptable alternative accounting policies, say there is a choice out of which one of the options has been chosen by the entity. So if there are some uh, application of new accounting pronouncements, how this is going to have an impact on the financial statements, how the management identifies estimates. Now this is very, very important area. If at all there are revisions to existing estimates, significant assumptions used in relation to those estimates, measurement basis followed. Yeah, indicators of management bias, as to what could be the management bias, what could be the indicators, adequacy of disclosure requirements, issues involved, related judgments made on sensitive financial statement disclosures. Okay, overall neutrality, consistency, and clarity in relation to the disclosures in the financial statements. Then there could be various other matters. For example, potential impact of significant risk, exposures, uncertainties, transactions which are outside the normal course of business, which may have taken place, and which is something forming part of the financial statements during the year. If there are certain areas, if there are certain items which are impacting the carrying values of assets and liabilities, okay, if there are some misstatements which need to be corrected, okay, so those corrections, if at all those have taken place. Similarly, there could be various matters, okay, it's only You can say a few examples that we have just discussed. Yeah, so there's no exhaustive list as such which is available. A lot of points are required to be looked at. Yeah. Now, when it comes to communication with those charged with governance as against the management, we have discussed that when it comes to the management is something with which the auditor is involved on a day-to-day basis. Okay, auditor is involved on a day-to-day basis. So that's why when it comes to the management, almost every other matter is discussed. Yeah. Or you can say at a working level, who is involved with the auditor? That's the management. But those charged with governance is not involved on a day-to-day basis. Okay. What is their role? To oversee the financial reporting process. So they are basically, you can say, the one who is there for supervision, to oversee, and that too in respect of significant or anything which is relevant for them. Yeah, as a process, of course, one may say that everything is relevant to them, but they can't focus on each and everything. That's why you have this management below them. Okay. So now, when it comes to those charged with governance, now what are the things that you go discuss, that they look at? Okay, so when it comes to the valuation, findings on the valuation report, and impact of those findings on the financial statements and audit report. Okay, but when you go talk to the management, so you'll be talking about the financial data which is used for valuation. Now, do you discuss this financial data which is used for valuation with those charged with governance? Answer is no. Why? Because it's a working level requirement. It's a working thing that you go and discuss with the client personnel. Okay, it's not something which is the conclusion or the impact or something which is very, very important. Yeah. When it comes to, let's suppose, a matter around going concern. Okay, a matter around going concern. So the basis of conclusion and the reporting implications is what those charged with governance will look at. But what is going to be the role of management? They will be involved in understanding how the going concern assessment was performed, basis for key assumptions, estimates which have been used. Yeah, again, the working level is something which is that of the management. So, can you understand the difference between the roles and responsibilities of these two, management and those charged with the governance? Quickly, can you now understand the difference between roles and responsibilities of these two? Yes, quickly, over to you. I'm just hoping you have got the clarity. You have been able to understand this now, and you have been able to bifurcate this now as to how this is required to be looked at, how this is required to be taken care of. Tell me quickly, everyone. Yes or no? Yeah? Okay, so now similarly, if let's suppose we talk about internal controls, which anyways we are going to discuss, understanding the processes, questions related to design of RCM, assessment of the management of controls, all of these are what? All of these are, you can say, activities over which the management will be involved. But can we say that those charged with governance will be involved in all of these things? No. So, what is it that they would want to focus upon? If there are some significant deficiencies, if there are some material weaknesses, that is what those charged with governance will focus on. That is what they are going to look at. Okay. Now, I can see one question coming up from Prem. Prem is asking, sir, can you again explain about those charged with governance? So, Prem, I'm not clear on your question. So, when you say please explain, so do you want to understand who is those charged with governance, or is your query something different? Can you please clarify? Okay, so he's saying, can you please explain the examples which are given on the slide? Yes. See, one example is about the internal. Now, what is this slide? What is it that we are trying to cover here? We are just trying to understand that in a company, when there are two parties, one that you call as those charged with governance, let's suppose it's the board of directors. Other is the management. Let's suppose in the management you have CFO, CEO, okay, and of course their team. So in this case, what roles, what responsibilities, or what areas are these two going to look at? Say, if you talk about internal controls, okay, management will be involved in a day-to-day activity. Means when it comes to the process, understanding of that process, designing the RCM, means identifying the risk, then establishing the control in relation to that risk, and then doing the assessment of various controls. So who will play this role? Who will have this responsibility? Management. But can we say that all of this is the responsibility of board of directors? Yes. Because on an overall basis, board of directors will be responsible for this. But will they be involved in day-to-day activities for this internal controls in a similar manner the way management is involved? The answer is no. And that's why they have this management in place. Management will take care of this. So what is it that board will want to focus upon? Board would like to understand if there are some significant deficiencies, if there are some material weaknesses which have been noted in relation to IFC. Okay, so that is what the board would want to see. So can you understand that at a higher level, at a broader level, what is going to be the role, what is going to be the responsibility? Yeah, what is going to be the role, what is going to be the responsibility? And at a management level, what is going to be the role? Prem, now clear in this? Prem, you are clear on this now? Quickly, please confirm. Are you now clear? Yeah, waiting for a response. Great. All right, so let's move further. Generally, when the auditor will go meet with those charged with governance, he will always be discussing even the significant matters, critical matters with the management. Yes or no? It will not happen that auditor has come across any observation, so he'll just go quietly meet the board of directors. No, because at the first place, the persons with whom he is interacting, dealing with on a day-to-day basis, he would like to discuss with them, find a resolution, get those adjusted in the financial statements if required. Okay, and on that basis, he can then form the conclusion and note down some of the key matters that he would like to then further discuss with those charged with governance. Okay, yeah. Now, in this case, you need to confirm, are these matters required to be communicated to those charged with governance? Over to you. What do you think? Do you think these matters, or out of these matters, which matters you believe as an auditor you will want to communicate to those charged with governance? Tell me quickly, which matters as an auditor you would want to communicate to those charged with governance? Quickly. First, unavailability of company's personnel during the period of audit. Do you think an auditor will go talk to the board of directors that maybe the accounts personnel is not available? Okay, maybe the HR guy with whom some discussion was required, maybe the procurement guy with whom some discussion was required is not available. Do you think that's a matter for a discussion with those charged with governance? Tell me quickly, do you think so? Yes, your understanding is correct, Prem. Priyanshi says one yes. Okay, very good. What about two? Basis of auditor's preliminary judgment about materiality. Third, unexpected extensive effort spent by the auditor to obtain sufficient appropriate audit evidence. Fourth, level of responsibility assumed by the management for preparation of financial statements. Fifth, non-cooperation by the management during the audit. In this case, quickly, if you can just let me know which all matters you will communicate to those charged with governance and which one you will not communicate. Over to you. I think Priyanshi has answered this. Prem says all except second. What about others? Quickly, huh? Quickly. Okay, Priyanshi is saying on third one, I am slightly confused. No worries. So we'll just try to understand that. Yes, quickly. Which one do you go and communicate? All right, so let's try to understand this. Now, in this case, unavailability of company's personnel. Do you think it's an important matter? Answer is no. Basis of auditor's preliminary judgment about materiality. See, when it comes to the materiality, materiality needs to be communicated. If there is any matter area over which unexpected extensive effort is required or has been spent, that is very, very important. That's a matter of CAM actually. Level of responsibility assumed by the management means management's responsibility. Will that be communicated? Yes. Non-cooperation by the management, is that important? Yes. See, if one of the personnel is not available, you will not go and talk to the directors that, see, your accounts guy is only today. But if the management is not cooperating, then of course you will go tell them. Yeah. Justification for auditor selection of sampling methods. So this is all about approach. This is all about approach. Okay. Now, okay, so let's look at this one. You have been appointed as the auditor of ABC Real Estate Private Limited. Yeah. And you have noted the following matters. With respect to the construction and operation of Aradhya Homes project, there were certain disputes between the company and the customer in relation to delays in construction and various technical issues. Based on legal proceedings, court passed an unfavorable order amounting to INR 50 million payable by the company to the customer. Matter has been discussed with the management. Company has a board of directors comprising of 3 members and management group comprising of 5 people. Overall materiality is 45 million. So in this case, what will you do? Tell me. In this case, tell me quickly. What do you do in this case? Tell me quickly. In this case, what do you do? Over to you quickly. Prem says communication with management and those charged with governance as it exceeds materiality. Okay, so now in this case, based on legal proceedings, court has passed an unfavorable order amounting to 50 million. So is this matter significant? Yes. This matter is no doubt significant. Why? Because this is something which is exceeding the materiality threshold. Priyanshi says this needs to be communicated to those charged with governance. Now, in this case, are there any requirements to communicate these matters to those charged with governance? Yes. If the management has already communicated the matter to those charged with governance, Does the auditor need to communicate the same to those charged with governance? Answer is again yes. Because irrespective of the communication which the management has done, will that be required on the part of the auditor? The answer is of course yes. Okay. Yeah. Clear on this? Clear? Okay. Now, I think we can look at this one also because this will give us some more clarity. Huh? So, firm A has been appointed as statutory auditors of ABC Limited for the year ended 31st March 2023. Yeah. There are some indicators of financial performance or position. Company has incurred losses. There are accumulated losses of 25,000 million, which is more than 50% of its net worth. So you can say net worth has eroded significantly. Current liabilities have exceeded the current assets. Our receivables are aged and their recovery is very slow. Borrowings from the banks are exorbitant. Financials are prepared in accordance with the India's framework, you can say as per the accounting standards. The risk of going concern has been identified as a significant risk by the auditor. Management was cooperative and provided the relevant information required to the auditors. Okay, so the management has done that. Management, however, believes that basis the mitigating factors available with the company, going concern assumption is appropriate. Auditor has determined that these conditions indicate that a material uncertainty exists that may cast a significant doubt on the company's ability to continue as going concern. Auditor has evaluated that a paragraph in the audit report in relation to MUGC needs to be included. There are no further findings. So in this case, do you think there is anything which is required to be communicated by the auditor to those charged with governance? And what will that be? Over to you. What will that be? Is that required to be communicated? Yes or no? And why? Tell me quickly. Is there anything that needs to be communicated by the auditor to those charged with governance in the given situation? Yes or no? And if you say yes, what should that communication be? What should that matter be? Yes, waiting for response quickly. I think it's quite simple. Jendra says risk of going concern needs to be communicated. Prem says going concern is significantly impacted and there's a risk of going concern. Okay, so this needs to be communicated. Sunil says yes, going concern matter needs to be communicated. Priyanshi says auditor should communicate about this matter. It's a significant one. Material. No, what is that matter? So that matter you have not explained, Priyanshi. So what matter is that? Okay, so let's try to understand. So what matter is this? See, during the year, if you look at the financial performance position, okay, though the going concern assumption is appropriate, so going concern is not a problem. Yeah, this is what management has evaluated, and this is what auditor has also evaluated. Both of them have evaluated this. But there is material uncertainty around going concern. See, going concern assumption is appropriate, but there is material uncertainty around the going concern. And the same thing auditor is planning to include in the auditor's report. So if there is a significant matter, should that be communicated to TCWG? Answer is yes. So can we say that it's a significant matter? Yes. Secondly, if the auditor is planning to include something in the auditor's report, is that important for TCWG to know about it? Yes, of course. In the given case, auditor seems to have already evaluated this. That in his report, he will include this para on MUGC. Yeah, that's all the more reason for the auditor to communicate about this to audit committee, board of directors, or you can say TCWG. Okay, clear on this? Yeah, everyone clear on this? Yeah, so I think process, all of these things we have already discussed. Yeah. All right. So then I think we can look at one more example. Okay. So let's look at this example now. ABC India Private Limited is engaged in trading of electronics catering to the Indian market. Okay. So they are engaged in trading of electronics catering to the Indian market. That's the nature of business. Management was not able to provide the audit team the below mentioned documents for their testing. So it seems some documents have been asked by the audit team which have not been provided by the management. RCM, documentary evidence to carry out walkthrough. Okay, supporting documents were not available to test ITGC, means IT general controls, IT application controls. Engagement team was therefore unable to determine whether the internal financial controls were operating effectively. However, engagement team has performed increased substantive procedures to ensure that there are no material misstatements in the financial statements. Engagement team decided to provide a disclaimer of opinion in the auditor's report on internal financial controls with reference to financial statements. In the given situation, first question, is there anything which the auditor needs to communicate to TCWG? Second question, if yes, when should that communication be made? Third, what will be the form of such communication? Over to you. Quickly. In this case, what will you do? As an auditor, if you were to do this, what will you do? How will you go about it? Tell me quickly, how will you go about it? All right, so I can see one response coming in from Priyanshi. Priyanshi is saying auditor will communicate about irresponsibility of the management that they have not provided the required documents. Okay. Anyone else? Anyone else? What is your answer? How do you deal with this? Prem says before issuing the audit report, this communication has to take place and the communication has to be in writing to TCWG, not by, to. What about others? Tell me quickly. Okay, so now in this case, let's try to understand. See, during the year, there's a conclusion of the part of the auditor. What is that? On the IFC, he is unable to draw any conclusions. What's the conclusion? That he is unable to draw any conclusion. Is that important? Answer is yes, because on IFC, a separate report is required to be issued. And in that report, auditor is planning to give a disclaimer of opinion, which is a very, very significant matter. Yeah. So there are two things which are problematic, which TCWG needs to know. One, that these documents are not available. So is that a process failure? Controls are weak. Controls are not operating effectively. That situation could be there. Yes or no? Who is responsible for this overall process? TCWG. So they need to be aware of this. Okay. Second, its implication are going to be significant. Why? Because in the audit report, when the disclaimer is provided, this is a significant implementation. So TCWG needs to be aware of this, that this is what the auditor is planning to do. Okay. Yeah. Clear on this? Yeah. So this communication has to be made during the course of audit, of course. Clear? All right. So now what we will do is we'll just sort of continue with our discussion. We'll also be looking at some more questions similar to what we have just done. But now we will be focusing more on one aspect, that is about significant deficiencies in the internal control. See, internal control is something that you know. And you also understand the importance of internal control. If a company has got internal controls, those controls are strong, then this reflects in terms of having a strong financial reporting process, one can say, and that reflects in a way that gives the comfort to the management, gives the comfort to the auditor as well. But for a company wherein the controls are not existing, or if the controls are existing but they are not operating in an effective manner, so what will happen? Confidence of the auditor will go down. Yes or no? So auditor will not feel very comfortable in that situation. He will not be very comfortable. Okay. So in such a situation, it becomes important for the auditor to make such communications to those charged with governance. Why? Because eventually this entire process is in relation to what? Is in relation to the internal control systems. is in relation to the financial reporting mechanism. Yeah. And if that is weak, if there are significant deficiencies, then the TCWG needs to know about it, because eventually that's their responsibility, which is getting impacted. Yes or no? Yeah. Okay. So now, as regards the auditor's responsibility, so auditor's responsibility to communicate with TCWG includes reporting of deficiencies in internal control. But does it mean that here again a list of all the deficiencies will be reported? No. Here again, what is required to be reported is the significant matter. Similar to what we have discussed so far. Okay, and what is going to be the important one? Important one will be the one wherein the deficiencies are significant, weaknesses are significant. Okay, only those are going to be reported. Only those are going to be looked at. Yeah. So what is the objective? So we have a separate dedicated auditing standard on communication specifically for control deficiencies. Yeah. So what is the objective of this? That this communication in relation to deficiencies, in relation to internal control, is made by auditor to those charged with governance. So let's try to understand as to what is a deficiency, what is a significant deficiency. Okay, all of these terms. So these are again not new to you, but let's try to understand. So what do you mean by deficiency in control? So you can say a control is designed, implemented, or operated in such a way that it is unable to prevent. Please understand, it is unable to prevent, unable to detect, unable to correct misstatements in the financial statements in a timely manner, or a control necessary to prevent, detect, correct misstatement in the financial statements is missing. Okay. So this is what you call as deficiency. Deficiency means the purpose of control is not getting achieved. As simple as that. What is the purpose of control? That the action, that the activity or the risk which is attached to that gets mitigated. If that is not happening, then of course the control has failed. Now, what do you mean by significant deficiency? I think with the term only you will get to know. A deficiency or a combination of deficiency is of sufficient importance to merit the attention of those charged with governance when that is considered to be significant as per the judgment of the auditor. Yeah. Now, this depends not only whether a misstatement has actually occurred or there's a likelihood that misstatement could occur. That may also be dependent on the factor that a potential magnitude of misstatement which may occur, which has not actually occurred but may occur due to the deficiency which is involved. Okay. Now, what are the examples for this? Likelihood of deficiencies leading to material misstatements. So let's suppose there's a deficiency. Because of this deficiency in control, material misstatement has taken place. If the control would have been strong, material misstatement won't have been there. Subjectivity and complexity of determining estimated amounts such as fair value accounting estimates. Financial statement amounts exposed to the deficiencies. Importance of control to financial reporting process. For example, general monitoring controls, controls over prevention and detection of fraud, controls over selection and application of significant accounting policies, controls over significant transactions with related parties. All of these. Yeah, all of these. Okay, next. Examples of indicators of significant deficiencies. Absence of risk assessment process within the entity, where such a process would ordinarily be expected to be in place. Evidence of ineffective response to identified significant risks. Misstatements detected by the audit procedures that were not prevented, detected, or corrected by entity's internal control. Okay, yeah. Now, if at all during the course of audit, auditor comes across these significant deficiencies, so what will happen? Auditor will go communicate that to those charged with governance. And again, this communication would be with the same mechanism. We'll go meet them, explain them along with various other pointers that we discussed, which are required to be communicated. Auditor will also explain these pointers. Okay, yeah. Now, let's look at this example. On reviewing the internal control over inventories during the course of statutory audit of a company, what was happened? Oh, sorry, what had happened? Internal control over inventories were reviewed. Auditor finds that physical verification is not being conducted at regular intervals. Means those intervals which have been stipulated by the management. Okay. Now, in this case, what has happened? Auditor finds this to be a significant deficiency. He points it out to the management in a one-liner. So what is it? That's the observation. Physical verification of inventories is not being conducted at regular intervals as stipulated by the management. Now, in this case, is the above communication by the auditor to the management proper? Ignore any statutory reporting requirements. So if there are any statutory reporting requirements, forget about it. For example, CARO you may or may not be knowing, forget about it for the time being. That's not important. Do you think this communication is proper? Over to you. Tell me quickly. Do you think this communication is proper? Quickly, over to you. What do you think? Is this communication proper? Something is required to be included here, which is missing out. Something that you will plan to cover, which you believe is not covered as of now. Prem says no, it should be a detailed explanation. So Prem is saying this one-liner is not sufficient. Auditor should detail out. So is that the problem? Yeah. Anyone else? What is your view? What is the problem over here? Tell me quickly. Anyone else? Quickly. No? All right. So let's look at the solution now. Okay. While pointing out significant deficiencies in internal control, auditor has not only to communicate the significant deficiencies, giving their description, but also explain potential effects and sufficient information to those charged with governance and the management to understand the context of communication. Yeah, so in this case, first, of course, the problem is that it's not descriptive. Secondly, if the management has not done this, then what is the implication? What is the potential effect of this? Has not been covered by the audit. Therefore, this communication is no doubt improper. This is not proper. Not only a significant deficiency needs to be communicated, it should also be explained to the management about the potential effects of not carrying out physical verification at regular intervals the way management has stipulated. It should explain that such a significant deficiency can lead to misstatement of inventories, impacting the profits of the company. Okay, impacting the profits of the company. Highlighting the importance of such a control, it should be stated that responsibility be fixed for concerned persons for adhering to such an important control. Okay, yeah, clear on this as to what was the problem in this case? Yeah, all right, so let's look at this case scenario now. Okay, so we'll look at this case scenario now. CA Gaurav is about to conclude the audit of a company. It's been noticed during the course of audit that there's a shortage of important raw material supplies being imported from China due to prevailing geopolitical situation. Company has shared with him its plan to deal with the situation. He is satisfied with the assessment of the company for dealing with the matter. The issue is disclosed in the financial statements. And considering the assessment of the management, it is felt that use of going concern assumption by the company is appropriate. Okay, so when they have prepared the financial statements, so the management has considered that this going concern assumption is appropriate. Besides, he also wants to be sure that all the subsequent events till now have been considered and accounted for wherever necessary in the financial statements. Before concluding audit, he requests the representations from the management regarding its responsibilities, written representations. However, it is noticed that such written representations provided by the management use qualifying language. He has also communicated significant findings from the audit in writing to those charged with governance. And he has retained a copy of all the relevant emails. Okay. Besides, there are certain matters which were communicated by him orally from time to time during the course of audit to TCWG. Okay, yeah. So this is the fact pattern that we have. Yeah. Now, in the given situation, we have got few questions which you need to answer. Okay. Now, as regards description of matter, which is around the concerning issue of going concern, which of the following statements you believe is the most appropriate in relation to the report of the auditor? First, auditor should express unmodified opinion, means nothing is required to be reported in the report. Auditor should express qualified opinion. Why? Because material uncertainty exists. Okay. Third, besides expressing unmodified opinion, auditor's report will include a section. What is that? MUGC. Okay, wherein he'll talk about material uncertainty around the going concern, but he's not modifying the report. Fourth, such an issue does not affect auditor's opinion. I think option number A and D are similar. So in this case, what do you think will be the course of action? Prem goes with C. What about others? Quickly. Okay, Almaz is saying C. What about others? Tell me quickly. In this case, what do you do? As an auditor, how do you deal with this? Okay, what about others? Quickly. How do you deal with this? Waiting for your response. So in this case, considering the fact that going concern assumption is appropriate, which has been evaluated by the auditor also. So can you give modified opinion? The answer is no. So that's why option B goes away. Correct? Considering the fact that there is material uncertainty, so can the auditor ignore the reporting of this matter? Not possible. So that's why option A and D are not possible because they are same. A and D are same. Correct? So what is the option left? C. And in this option, what is required? That the auditor should specify that there is material uncertainty. Correct? Yeah. So that's why what should be the right option? C. Okay, next one. As regards going concern basis of accounting, which of the following statement is true? A company showing net loss in its financial statements is essentially not a going concern. Following going concern assumption of accounting is primary duty of auditor. In case a company is not a going concern, its financial statements must be prepared on liquidation basis. Audit procedures seeking confirmation from banker regarding outstanding balances relates to verification of going concern assumption. I think it's very, very easy. Let me just see who answers this. Okay, great. Prem is saying it should be C. What about others? Almaz says C. Priyanshi says C. I think this is quite clear. Yeah, because in all of these options, C is the right answer. Whenever there's a going concern issue, means you say that assumption is not appropriate. So what will happen? You will record the assets and liabilities at realizable value. Okay, that is on liquidation basis. Okay, next question. Which of the following statements is true in respect of auditor's responsibilities in respect of subsequent events? There is no obligation for auditor to perform procedures for subsequent events. There is no obligation for auditor to perform procedures after signing of audit report. Auditor has to rely only on written representation regarding subsequent event. He has no other means to know about such events. Auditor should perform necessary audit procedures to know about events occurring between the date of balance sheet and the date of auditor's report. Tell me, which of these is the correct statement? I think once again it's very simple. Quickly. Great. Prem says D, and that's the correct answer. So anything which falls between date of balance sheet 31st March and till the time financials are not signed off, that's a subsequent event which may require adjustment or a disclosure which the auditor is required to take care of course. Yeah. Okay, next question. As regards use of qualifying language in the written representation, which of the following statement is most appropriate? It is reasonable for auditor to accept such wording if the auditor is satisfied that representations are being made by those with appropriate responsibilities and knowledge of the matters included in the representations. The written representation should be unconditional. Such a wording is not acceptable. Such a wording dilutes intent of written representations. However, it can be accepted by the auditor only in exceptional circumstances. Qualifying language in written representations is compulsory. Okay, so in this case, option has to be A. Yeah. So this has to be A, right? Okay. So the last one. As regards auditor's responsibility regarding matters communicated orally with those charged with governance. Now, please remember during the during the course of audit, there were certain matters which the auditor had communicated orally to those charged with governance. So that's what is given in the case scenario. Okay, sorry, answer is visible. Huh? Yeah. So now, in relation to that, which of the following is most appropriate? Matters communicated orally have to be documented by the auditor stating when and to whom these were communicated. Matters communicated orally need to be put into writing. It is sufficient to be communicated orally. Matters communicated orally need to be put into writing. Sorry, need not be put in writing. It is not practically feasible. Is this option correct? No. So C is gone. Matters communicated orally have to be documented by auditor stating to whom these were communicated. Now, you have to choose the most appropriate. So, amongst A and D, obviously D is gone. Let's look at B. It says you need not put this into writing. So, is that possible? Again, no. So, the only option which is correct, we can say are A and D. And amongst A and D, which is the most appropriate one? A. Why? Because it requires auditor to communicate. It also requires that when to communicate, to whom this needs to be communicated. Of course, that's the requirement of the auditing standards, right? So I think with this, we can just conclude our discussion for today. We are through with this chapter now. And in the next session, you are going to start with a discussion around this next topic. I can see one query coming from Priyanshi. Priyanshi is asking, sir, confused between A and D. Okay, so let me just quickly go back to A and D. So in case of A and D, what is the difference? In case of A and D, the difference is that when the auditor will do the communication, so auditing standard requires auditor to check that when would that be communicated and to whom that will be communicated. So option says that when to whom needs to be considered. But option D doesn't talk about when to be communicated. It only says to whom these to be communicated. Yeah, so that's the difference. So that's why which one is the more appropriate out of these two? It has to be A. Clear, Pranshi? Clear on this? I'm just hoping you're clear. Yeah, all right, great. Anyone else? Any more questions? Otherwise, we are through with our discussion. And in case you do not have any questions, then we can just close this discussion up. Thanks everyone for your time and for this wonderful participation. I can see ma'am is also here. Yeah, so just to give you some more guidance. Over to you.
Thank you so much, sir. Thank you for the session. Thank you for this class. And thanks to all the students for the patience listening. And I hope you all are gaining knowledge from these LVC lectures conducted by Board of Studies only for you. And by so far, we have completed 7 chapters. And today we have completed chapter number 7, completion and review. I must say this chapter is really very important. Weightage of this chapter is 8% to 12% of your examination. That is, it covers 9 to 14 marks. At least 9 marks paper will come from this chapter, completion and review. And can any one of you unmute yourself and tell me how many standards we have covered in this chapter? I think you all must be aware. Technical team, can they mute themselves? Students can mute. Or you may raise your hand, I'll unmute you. If any one of you want to tell, I will unmute you. Okay, let me tell you, we have covered 6 standards in the chapter. Chapter number SA 560, 570, 450, 580, 260 and 265. And can you tell me the name of SA 560? You can raise your hands if you want to unmute yourself. I can see many students are there on Zoom. Okay, so they are not ready to speak right now. I must tell you, please start revising your chapter side by side. And I hope you all are preparing handwritten notes, because in auditing, handwritten notes are really very important. They play a very important role in your 1.5 day revision just before the examination. So if you are not preparing, start preparing your notes side by side, बिकॉज अगर आपके पास पहले से ही नोट्स प्रिपेयर्ड होंगे तो आपको रिवाइज करने में बहुत आसानी होगी. And we generally think that auditing is a theoretical subject. We are not required to write anything. But this is just a misconception, because we need to write answer. We need to practice written. We need to do written practice in auditing, and it is must. So, as the chapter is completed, you can refer Saransh booklet also on BUS Knowledge Portal. It is uploaded for your revision purpose. You can go through integrated case scenario booklet or model test paper booklet for practicing the questions. And next class is on 2nd May, and the topic will be chapter number 8, audit reporting. So I will request you all to please revise the chapters side by side, so that you don't get panic at the last moment. Thank you so much. Yes, please. Wait. There is one query. Ma'am, in WhatsApp group, some students are asking for handwritten notes. Should we share them because we have made it on? No, this is your own choice whether you want to share it or not. But I would say that everyone should prepare their own notes, because when you prepare your notes, you just not only write, you go through the topic, then you divide your topics, then you marks important topics, important questions, important lines, and important provisions. So I will request every one of you to please make your own notes. Yeah. Any other query? If you have any query regarding LVC, any topic, any question, you can ask through. Thank you, Priyanshi. You can ask through BUS mobile app query feature, or you can call us on 0120 3045 925. Please, everyone, note down 0120 3045 925. Thank you. I think there is no query. We can end the session. Thank you so much.
Recording stopped.